Okay, and start the screen display. Hope you can see all that. So in front of you, you can see the S&P 500 cash market up to date to yesterday. So with that, I'll hand you straight over to Tom.
Hi everybody, Tom Williams here, speaking to you the usual Worthing, nice little resort town in the south of England. Anyway, we've got the chart of the S&P 500. Now it's only up to date to yesterday, being the daily chart. Now you should be able to see something within 2 seconds here, right? Can you type in, read it out? What can you see on this S&P chart that's very, very important to us? Just type into the question box.
Nothing yet. So there's a slight clue as Tom's asking this week and not last week particularly. Yeah, so everyone, what can you see that's significant on the chart? So Rita will read out any responses. Hang on.
I'll show you, Tom, what they're saying. All right, we've got here high volume, big range, very high volume yesterday, high up bar, market bouncing off trend line, above range, high volume, break to upside of triangle, effort to rise 2 days ago, testing yesterday, extreme spread, big reaction up, probably due to Fed release. Markets generally don't like high volume up bars, says Park. Yes, we know. So, yeah, two people touched on something correct there.
Well, actually, most of you, two of you got it. It's so obvious that I'm disappointed if you didn't or can't see it. I mean, Rita walked in the office, she's been at work, so she couldn't see yesterday, and she immediately spotted it within 2 seconds. Hostility. No. What's significant here is, apart from the fact it's quite a nice chart, right, you've got a test. Look, a test. That means, a test means it wants to go up. Down bar, right, fairly narrow spread, especially relative to the previous bars. Close on the high, volume reasonably low. That's a test in the rising market. That means we're going to get higher prices. You should see that immediately. Now, admittedly, all the other stuff's good. You've got these converging trend lines, which pushed it into an arrowhead. Markets, they don't like being squeezed into those arrowheads formed by trend lines, because it means the balance of supply and demand is getting closer and closer to equilibrium. Market doesn't like that, so it needs to break out of that. And of course, we've got this widespread up, which apparently was on news and all the rest of it. We got what looks like a shakeout here, but that was knocked back by this narrow spread up bar. But we've got another shakeout here. We've got loads of signals around. Widespread up, but the most significant is a test. This test here. Very, very important. Hang on a minute. Sorry, the phone's just ringing here. Who's that? Oh, Gavin. All right, you should know we're starting at 5. Sorry, folks. That's Gavin spending all his money up in London. Fortnum and Masons with 3 children. Father Christmas, a whole lot, you know. So that's his problem. Now, the most significant thing is here is this test. This will more or less guarantee it's going to go up tomorrow. Right? You should spot that immediately. Tomorrow being today. Right? You should see that immediately. But you certainly sound by your replies, if you certainly look at quite a few things, which is obviously correct. Can you put the real time up now, 20 minutes? Yeah, hang on.
Because Peter says, I would expect much lower volume for a test bar.
Well, don't forget you are at the top of the market here, but it doesn't matter what the volume is. It's nice to see it really low, obviously, but it's a test. That's a test in anybody's language. Now, I agree with you. We can't look for perfection, otherwise you're going to miss everything. You are at the top there on that trend line, so there will be a certain amount of hesitation. I know there's a certain amount of supply present in the market still, but that is a test. And whenever you see that, it's almost guaranteed it's going to go up next day. So, Peter, put up the 20 minutes, say. Oh, yeah.
So Krista says, is it a setup for a longer run? Tom says, yes, it is. Well, Krista, a test in a rising market is a very powerful signal to go long. GR says, I thought you needed to wait for the next bar to see if the test is up or down.
Well, you can be super efficient and wait, you know, but, you know, the thing is, the big deal, if you go long and suddenly it doesn't go up, then you close out. You won't go far wrong. You certainly won't lose a lot of money, you know, if you go long on a test, even if it fails. I personally always jump in on things like that. That's a test in a rising market. And you should recognize that immediately. Straight away, bang, it should hit you. Like you won the lottery. Now, this is the result of that test today. This is a 20-minute bar chart, look. There's no significance. The fact is I've got 20 minutes up. I could talk about any of these time frames. But here, 20 minutes, we got loads of indications telling you it's going to go up. Look. What's that say, Pete? That says potential stopping volume. Yeah. There's no shakeout. Stopping. There's loads of information. And also, there's a red arrow there, which is fine. But immediately, it's tested, look. Look. Immediately. Now, I think I only mentioned this in the last seminar we did, and I've mentioned it at least 10 or 12 times lately. Whenever you see a red arrow in a bullish market, and the next bar is tested, which it is, look, there it is. Signal to prove it. Right, it means that it's going to go up. Right, so up it goes. Widespread up as it pushes up through any resistance to the left. That's the ploy they do to keep as many traders locked in or out of the market. Widespread up, it means that all these people that are locked in up here but still didn't sell are not going to sell because they, oh, now we're making money, I'm staying in. And yet those that missed the boat say, oh, well, I've missed the boat now. Look, it's gone up. And it goes on and on like that. Now, another red arrow, look. And lo and behold, another test, look. There's no arrow on it. But it's a down bar, look. Clearly a down bar. Narrow spread. Close in the middle. Classical test. Low volume. Low volume is volume less than the previous 2 bars. And it certainly is less than 2 bars here. And that's testing this. And this red arrow here. Again, it's screaming out at you, I'm going up. Okay? Widespread ups, it pushes up through anything to the left. Now there is an arrow here. Yeah, now this is not really an upthrust. You can't blame the poor computer. It just got its knickers mixed up here. It may look a little bit like a test, an upthrust, sorry, but it isn't. A true upthrust appears after you've seen a serious sign of weakness. And we haven't seen weakness. All we've seen is strength so far. And normally, an upthrust is you get far more of the bar above the close of the previous bar than below. And that probably does fit the criteria somewhat. That's why the computer thought it might be an upthrust. So the market, because the computer model's got that one wrong, it didn't take any notice of it. Up it goes. And this looks like, what's that? No demand, Peter. Bit of supply coming in, which is natural with that move up like that. Now you see how you can read these charts very, very clearly. And on the back of that test we saw yesterday in the S&P 500 too, that was a brilliant test. They're determined to have a Christmas rally. They like having Christmas rallies for some reason or other. And it's pretty obvious that they're determined to take that up over Christmas as far as possible. If you've got any questions, please type them in. And Rita's there looking at the screen.
Park says what is interesting is that the smart money opened the ES and the SPY down before going up. Peter saying none of my indicators except those to the upside function in that crazy bull market.
Sorry, say all that again?
Right, Park says what is interesting is that smart money opened it, the ES and the S&P SPY down before going up.
On what time frame?
On what time frame was that, Peter? Just waiting for Peter's response. No, Park, sorry. Sorry, Park. What time from? All right, on the 1 or 3 or 5 minute down. Yeah.
I mean, it might very well have done that, but that's got no defense against the fact that there's a test yesterday, it's going up. Remember, imagine you are a spy and you're being followed and you want to put people, the other people following you off. What, you shoot the wrong way at first, then turn around and double back. They do the same thing in the market. These markets are not here to help you. They're here to shake you out, suck you into bad trades, and they want you to lose the money so they can make it. Believe me. But it was screaming out at you the market was going up yesterday. And what was the other question?
One person said none of his indicators work very well. But this one says, what would be the long entry setup?
Well, I don't understand people when they say how long you're staying in and what, all this business. You go long and you go short, and you stay long, you stay short until you see opposite signs of strength or weakness coming in. It's going to stop your move. Does that answer your?
What would be a long entry setup on this? Yeah, what would you be looking for a long to go long?
Well, that's what I say. I mean, if you want to go long, I mean, what's wrong with going long on the test or something?
Perhaps you need to explain what the test looks like.
Well, a test looks like exactly what it looked like yesterday. A test is any down bar, which would be in red. It's got to be down. You'll see it be on a narrow spread, relatively speaking, close in the middle, and the volume will relatively be low. That is less than the previous two bars. And if you see that in the bullish market, see that especially after a red arrow has appeared, and the professionals want to test the market because they've seen the weakness as well. The weakness that brought up that red arrow might be a bit of no demand or a little bit of selling from somebody, and they just want to test the market, and that's what it did. So it's a down bar on the narrow spread, close in the middle with volume less than previous two. Then that's going up. Any more questions?
Yes. Could we look at Euro daily, Peter? Euro daily. Can we look at the Euro daily? Does this market still look bullish is the question, Tom.
Personally, Gabby likes to follow this. I don't follow the euro all that much, to be quite honest. But there's nothing wrong with it. It's quite good, actually. Yeah. But it looks weak, doesn't it? On this chart. Why does it look weak? Well, it's gone up, look. The spreads have narrowed. It's rounded over somewhat. Widespread down, and this looks like no demand, that last bar, closing off the high. That doesn't look all that strong to me, especially with this widespread down bar. Trap up move, it says, which is probably about right. Well, the trap up move, I think the computer's referring to this bar here, which appears to be going up at a narrow spread, low volume. Then they mark it up slightly to put people off, catch stops, look, and then turn it around, bang, down. Strong markets don't normally do that. I would say this is still weak at the moment. That's the euro. I was.
Krista, the test in the middle, is that a moment? Is that is your question, Krista, on this particular chart? The test in the middle, is the market strong at that moment? Are you talking about this, or are you talking about in generally, Krista? This chart. Right. Yeah, so there is a test there, Tom, but it's gone up. Can you see that test here? I think he means this here. test?
Yes, there was a test there, but it's really going to be a fail test because the next bar, look, is up on low volume. There's no demand there, and it's closed almost in the middle. And there's no response here. And that's why the computer's probably come up with that signal there. It's trap up move. What, on the test?
On here, that one, but it has closed quite below the middle. It's a bit up thrusty in a way, isn't it? After
What, there?
Yeah, that one. Well, it's no, but it's not less than what the previous two. That's really good. Would you go long at the test? He's saying, would you go long at the test?
Well, yes, if you go long at the test, if you went long there, then you saw that test was failing, which gives you almost 2.5 bars to decide, then you close your position. You see, if you're looking at a more longer term view of the market, then you need to look at daily, weekly, or even monthly charts to get the overall long-term trend. And that also comes up with good signals, which will tell you whether it's bullish or bearish. I saw a quarterly chart once. It was brilliant. Somebody made up a quarterly chart. And all the signals were spot on. They were more accurate than any others.
Krista says, what would you like to see direct after the test?
Well, the main thing is with a test is you can very often tell whether it's going to be a failed test or not because of the background. What's the background telling you? Now, in this euro, there is a bit of weakness in the background, but you would expect a test to produce an immediate response up. If there's any hesitation or that's failed, then you have to show caution. But if you want a longer term view, you need to follow a longer term chart. As you can see that if you looked at, say, even a monthly chart of the S&P 500, it's actually incredible how it keeps going up.
Okay, yep, got a very good point here from Mitchell, and I'm going to say something first and then I'll pass to Tom. The S&P test we have been discussing today, being this one here, says Mitchell, did not have low volume and did not close in the middle. I am certain we have analysed tests that closed at their lows, highs and in the middle. If volume is not a necessary indicator, then I really can't identify a test definition that doesn't keep changing to fit the current circumstances. I wish we would commit to a definition that remains the same. And yeah, well, good point. And I personally, in looking for the most clear and safest circumstances myself, would be looking for an uptrend, a rising market, and a low volume down bar closing in the middle or the high, and that is volume less than the previous two. But if I saw this one, well, I immediately saw it and thought, well, that's a test because of where it closed. Now, if the volume had been really high, then I would have been a little bit cagey. But that volume, compared to the huge volume on the previous bar, is low. But it's where it closed. It's gone down there at some point at the bottom there, during the day, found that there was no supply at some point, and it's closed up on the high. So yeah, tests do come in different forms, and there is, I believe, in the archives from a year or more than that, 2 years back, a very good webinar done by Philip Friston on tests, and he's very clear. Philip is he's very clear and very accurate, and he's someone you want to listen to. Yeah, I can understand sound a little bit of frustration there about tests. Tom, can you say anything?
Well, there is something significant I failed to mention. But on the first book I wrote, The Undeclared Secrets, the Driver Stock Market, I remember writing it, that the volume on a test can be high and it can be low. It can be high if it's a futures market. Now, you're sure you're not looking at the futures market? Because that's different. Don't forget, this is a cash market. This is what we're looking at now is cash market here. And that means that it's a cash market that's king. It's a cash market that drives everything. This is where the equity lies. This is where the value of everything lies, in this index. Now, imagine you are a professional trader and you immediately see that there's a successful test in the cash market. What are you going to do? You're probably going to jump into the futures market, you and 1,000 others, 100 others, with your huge orders, and that will increase the volume on the future. Now, put up the future of the daily chart, Peter, please. Is that it? No, that's not it, is it? Now, if it's the future, is it yesterday? Yeah, but that red one is yesterday, the test. Now look at that volume on it. It's high. And that's the reason why it's high. Is because the professionals have seen clearly what I pointed out to you, that is a clear test in the cash market. That's where the equity lies. That's where the strength lies. That governs everything. That's say I'm going up or down, the cash market. And they see that, so they all pile into the futures market, right? And that will account for higher volume. It's a game of understanding what's going on here. And the charts are always right. So if you see anything you think is wrong, you're wrong, because the chart cannot really be wrong. You're not misinterpreted somehow. The chart's it has to be right. The chart is like a language speaking to you. It's like Braille. The Braille's written in the high, low, close, and volume. Knowing the professional money bully their way in and out of the market with their huge orders.
Good observation from Tim. That big volume should be the day before with the big bar, which would make sense, wouldn't it, Tom? Because of what
Right. Peter thinks you might be right.
So real time. Sure enough, high volume on the previous day and low volume on the test.
Yeah. Now, it doesn't matter whether who's right or wrong here. The thing is, you've only got to look at that bar to see it's a test. Forget about the volume for now, because the reason why they misprint these volumes is done deliberately, of course. It's done because they know professional people can read so much out of volume. and they don't want that. It's there for their benefit, not yours. So, but the main thing is, look, you've got this huge widespread up on the previous bar, right? You've got several shakeouts there. You've got green arrows at the bottom. Okay, now it's logical that even looking at the price spread, is a test. That's it. Well, it proves it's a test because that's why it's gone up today, look. It's gone up today because of that. It's gone up quite substantial by the look of it.
Okay. Tadej would like you to put an MMM stock. Yeah. So there was high volume widespread down bar on the 2nd of December. That kind of bar happening at the top can mean distribution or accumulation. How to differ? Right, so that one to the right. Yep. There was high volume widespread down on that day. That kind of a bar happening at the top can mean distribution or accumulation. How to differ?
Well, normally when they gap down like that, see, you've got the weakness here, the up bar narrow spread. Right, this high volume here, relatively speaking. So you get this widespread gap down. It's probably on some bad news of some sort. There's a lot of volume that appears to be stopping volume on the red down bar, look. Okay, so you do nothing there because you're not sure. You just sit, but you observe that there appears to be stopping volume. Look, down bar, fresh low ground, narrow spread, close in the middle with massive volume. There's even a signal there, look. Potential selling climate. Right? So you've got all that going for you, but then you know you're waiting for a test of some sort before you tend to go long. So up it goes, fair enough. The blue bar's probably no demand. Off it comes. Now the significant thing is it comes back down into the level. I've just drawn that line across there, look. The level where that volume was apparent. Volume means supply, right? Activity, which isn't healthy for the market till we know what it is. However, the market then falls back down onto that level. It's the level that's important. Forget about numbers and all the rest of it. It's the level, look. And lo and behold, the volume's disappeared. So that means that the supply that's evident here on these down bars on very high volume has now disappeared. And the market works on supply and demand. If there's no supply, demand must be greater than supply, and you're going to get higher prices. So will that make sense?
Okay, thank you, Tom. And we were talking about volume. Peter says, on my Ninja chart, is the allocation of the bars correct? The big volume bar belongs to the huge price bar from the 18th of December. Peter, do you know anything about that?
Yes, it's Peter here. Just being reminded there about this business of the daily data on e-signal. So Tom's got an e-signal data feed. Their intraday data, okay, lines up more or less, but on the daily they seem to have the volume on the wrong day. In other words, where are we? Let's have a quick look. I'm sure some of you know this already, but this volume here should be on the previous day. So they post the volume a day late. They have the pricing correct. Why, we don't know. I believe one of our colleagues in the past wrote to them asking about that, and they didn't really sort of give an answer. If you look at a different set of data, like for example Ninja, which I don't use, but I do use real-time data, a data provider, you'll find that the volume here is much less and the volume here on the blue bar is much higher, which would make sense. Now that's when we're talking about daily volume. If you look at the lower time frames, eSignal are in agreement with everybody else. I hope that is the answer. That makes sense, yeah? Hang on, back to Rita.
Whilst we're talking, if there are any charts you want us to look at, then please do. There are a few comments here about volume. Peter says, this was the reason for me to change from eSignal 5 years ago to Ninja. It's cheaper and better. Chris says, eSignal refuses to change this volume reporting. Mark says, eSignal on my machine here in North America too is wrong. Stock charts is correct. And now Thomas says, if you look at the ES hourly chart of the 18th, do you want to do that, Pete, and compare it to that one of the 19th, you can clearly see that there was a lot more volume on the 18th. Do you want to do that, Pete? There was a lot more volume on the 18th. Yeah. Oh, sorry. Yeah, you said. Sorry.
Yeah, so you're quite right. If you look at the volume on the lower time frame, on the 19th, which is the big wide spread up, the volume you can see clearly for that day is rather high. The following day, which was the test, the volume, as you can see, is lower, which of course would be at variance with how they've posted the information on the daily chart. So I hope that's not muddied waters, but eSignal posts the volume a day late. Why, we don't know, on the daily chart.
The question here, what would be the most accurate source of volume data for YM futures for intraday trading?
Well, if you're doing less than daily, then I think any of them seem to be okay, including eSignal. If you're looking at the daily chart for eSignal, clearly the volume falls on the wrong day as they post it. Tom?
Well, the most accurate volume, of course, is tick volume, which we don't have because of Gavin's the way he's handled things. But I'll keep pushing for tick volume, because tick volume, they can't play any tricks. There's obviously these days of rapid communications, there must be an underlying reason that they delay that volume, and I know exactly what it is. It's because the information in the volume is so great that they don't want the professional side, especially getting it, if they can help it, and they don't want you to have it either. But when you get to read these charts, you get so used to them, you could see a test, you could almost look at it without looking at the volume, but you could check on the lower time frames. But the ideal thing, of course, would be tick volume. But I've tried, I had tick volume running here, I had tick volume working 6-7 years ago. But the way Gavin controls these programmers, nothing seems to have happened. But tick volume, but if you ever see, the main thing with a test is his visual appearance. It's be a down bar, definitely red. It will definitely be a narrowish spread. It will definitely close in the middle or high. Then if the volume is low, fair enough. That's wonderful, or you can work that out. But you can see whether it's bullish behind you or not. If it's bullish, right, like charts we've been looking at, then it's a test in a rising market. It's a well-known principle.
Thomas says if you use the 1440-minute chart in eSignal, which is exactly 1 day of 24 hours, you get a much better volume figure. Unfortunately, this is not possible in TradeGuider. It also says, so the best thing is looking at lower time frames than 1 day. So that, I mean, I do. I don't trade daily. I mean, obviously I look at the daily chart to see if there's a test the day before, then obviously I know I can gauge that the next day will be up. But I only follow sort of lower time frames, so volume is not a big issue for me. Peter says trading is difficult enough. The data you work with has to be absolutely correct. AJ Robinson. Yeah, AJ is great. He really is. AJ from our team knows that problem very well. Yeah, AJ is fantastic actually. He really knows his stuff and he's very, very helpful. Right, so I did a little while ago ask for people to put in some any charts they want to put in. Pavel would like, oh hang on. On still another one's come up about data. The data problem with eSignal is a legacy issue. Reuters used to have this problem as well. This issue, to my knowledge, does not relate to every futures exchange. You have to check each one individually. I do know that NYMEX has the problem. I also use the total number of minutes in the day to work. I also just download the daily data from another source to use. So that might help some of you. Thank you, Tom. So TF, Peter, TF. We'll put the daily, I assume you're interested in daily chart, Pavel? Well, that's all we've got anyway. Okay. TF. Do you know what TF is, Pavel? What stock it is or whatever? Tom's just looking at the chart now. He thinks there's something wrong with our chart. He says, he says Russell 2000. He said, it's the, yeah.
Yeah, Russell 2000. Yeah. No, I keep away from this one at the moment. No, it doesn't look right, does it? This. Well, there's a lot of weakness here.
Let me just try something, Tom.
Come on then. That end bit doesn't look right, does it?
Is it a future? We just don't have that.
Oh, sorry, we don't have that.
Yeah, we don't have that data, sorry.
We don't have that data, sorry. I never trade the Russell. It's too big.
Yeah, it's just the data provider. We haven't paid for it. Right, that's IWM.
Do they know? I ought to speak first, Tom. Sorry, so people know what we're doing. No idea what we're doing. Yep. So Mitchell says the IWM is a very good way to track the Russell. So that's what we're on at the moment.
Okay. Well, immediately to me it looks weak. You've got these tops here that look very weak. This looks weak here. There's a signal on it. But the thing is, this last blue bar, look, blue bar, up bar, look at that high volume. Markets don't like high volume and up bars. That means supply has hit that. And that means it's going to be, at the best, it'll go sideways or even fall. They have waves of supply and demand, waves of people selling and waves of people not selling and all the rest of it. And they wait. But whenever you see these up bars, look, these blue up bars on this high volume, that is not good. But you've got this weakness in the background. That, to me, looks as if it's falling. You could draw trend lines on that if you want to. Can you draw a trend line on that? First two highs? First and first low. I find it difficult to look at chart without trend lines. Yeah, there. First two highs. First low. That's it. Now that's a good indication what that's doing, look. And here, this blue up bar, look, it's overbought. I would say that's not a healthy looking chart at all. Not for the upside.
Right, one moment. The price went above that bar he is talking about now. Is that a test just before that large blue up bar? Yes, that is a test just before that large blue up bar, Jerry, and it's a very lovely looking test. That one, yeah, that one, Tom. That's the sort of thing I would be looking for in a test. Perfect. Yeah. Right, so Carlos says the price is way above that blue bar with high volume today. So why is
Yeah, so this is not a live chart. It's up to date till yesterday. So we don't have the intraday or live data as such. Just got end of day on this. Yes, and you're quite right. The price has risen in harmony, if you like, with the index, but there's a test behind that. So, have you got anything to say about that, Tom? Say today the action has been up.
Is this a daily chart then?
Yeah.
Well, today may be up, but you're right. There is a test there, which I must admit I didn't see at first. But the test is definitely, that's why it went up like that. But it's high volume in that bar. If it's gone up today, it won't be going very far. I wouldn't have thought. Not with that high volume in that up bar. You don't want that. You don't want to be involved, risking your neck, in any sort of vehicle that has high volume and up bar like that.
Okay. Mark says, I just left a webinar with the presenter extolling the technical indicators such as MACD, RSI, etc. It gave me a headache. VSA is so simple and so effective, I can't go back to those other methods. Do you want to speak about that, Tom?
Well, as you're all fully aware, I never ever talk about MACDs or any of those mathematical formulas that have been so popular and famous for many, many years. And the reason I never do it is because the syndicate I work for never touched them. They use trend lines and they use 50% retracements. and they used the trend clusters, but that's about it. You never saw them looking at any other formula at all. So what's good enough for them, and they were making big money, good enough for me. But my view is that because there's so many clever people out there, right, really, really clever, believe it or not, you've got your Einsteins and that tucked away in out there. If there was an easy way to make money, right, by using a simple mathematical formula, they would have been onto it. And when they get onto it, it would have diluted it way before you got anywhere near it. And that's why I don't think they work.
Yeah, it's Peter here again. So I found I like to think of myself as being open-minded to some extent, at least, as best as you can. And I've looked at lots and lots of different things, anything to do with oscillators, RSI, MACD, etc., etc. And they do have some validity at times, but what I found was that they're usually very, very late because they're lagging indicators anyway, and they're in hindsight. And when you compare them, in my experience with VSA, well, there's just no comparison really. In as much as, let's say, MACD says take a long position, well, the move could be over almost unless you're in a nice trend or something. So I've looked at loads and loads of systems, in other words, and found that there's no holy grail as far as those systems are concerned. And as Tom says, those people that Tom worked with made money, and probably quite large amounts of money that they were dealing with. So they made use of what Tom talks about, which is VSA, or otherwise known as supply and demand. And that's all we can say. Rita?
Carlos is talking about this chart. That big blue up bar with high volume happened during the news, so it's more of a shakeout, like what happened on the S&P 500. Is that correct? Yeah.
No, a shakeout occurs on a red down bar. You see, when they mark it down vigorously like that, it puts the fear of God into many traders, the wrong side of the market, and it will shake them out, many of them. And the fact is they get shaken out and sold, sell off in fear and panic, gives the professional money that wants to buy 50,000 contracts an opportunity to move into the market. And that's why it's called a shakeout. It happens on the down bar, not up bar. Does that make sense?
Okay, Mitchell's saying, how is that high volume up bar on the Russell different from the one we've been analysing on the S&P?
How is that? Well, how is it different? Well, first of all, it's above. It's shot up above most of this stuff here. But the thing is, it doesn't look right to me. It's overbought to start with, where the high volume bar on the S&P isn't. It's contained within the main move of the market, if you look at it. But this is shot up like a chimney. This is not a healthy, it may go up a bit, yes, but it's not a healthy thing to see this high volume in these up bars. Believe me.
Mitchell says there's been nothing negative said about the high volume up bar on the S&P. There's been nothing negative said about the high volume up bar on the S&P.
Well, the reason why there's been no negative response because it was tested. That's why. And although it's high, right, yes, you've got so-called high volume here, but look at the price spread. I mean, that's in keeping with that spread. And next day it was tested. That's very, very strong sign of strength when you see that. But don't isolate these things. Look at it as a whole. You know, you've got these shakeouts back here. You've got these signs of strength. You've hit these trend lines. Huge widespread uplook, and they even went down to this lower trend line to catch stops and whatnot, mislead as many people as possible. They turned around rapidly. So relatively speaking, in a way, that's almost like low volume relative to the huge widespread up. But the next bar was tested. You've missed a golden opportunity. You've missed the Christmas present. Anybody didn't spot that immediately.
Could the high volume up bar be absorption volume after a test? Yep, and the answer to that is correct. Yes, that's right. Tom has mentioned that. And Edmund says David Weiss on Wednesday did mention there is a possibility of climactic action on Wednesday's price bar on the S&P 500, but it has been tested on Thursday, which is correct. Yeah. Yeah. All right. So Tom can say something there.
No, definitely not climactic action, because first of all, you have to be overbought, right? In other words, you have to have the move above the trend line that you can see there. And as the market races up, then the volume comes in. Then it could be climactic action. This is probably how the market will finish. This market will run its course. And it does appear they're absolutely determined to have a Christmas rally, regardless of what happens. But if it starts moving up next year, and you see very high volume and up bar as it's up overboard, especially if it closes in the middle, into fresh high ground, that would be climactic action. But if you see it gap up on a narrow spread and very high volume, that's also climactic. We call that the end of a rising market. And you do not want to be long when you see that. I personally just short on them when I see that sort of thing. I don't mess around waiting for confirmation, all this, business. Just go in.
Can you go back to IWM? I can't remember what you said, Tom, on IWM. Carlos says the price today is at 114. Does that change Tom's point of view? Show him, Pete. Could you just do the... That's where it is today. Yes.
Well, I'm only looking at end of day here. But as it's shot up obviously in sentiment with the rest of the markets. But you can probably bet your bottom dollar volume's extraordinarily high. In my experience, you want to keep away from charts that have high volume and up bars like that. Sure, you're going to miss the boat here and there, and it'll go up or down and things like that. That's how the market works. The market, if you're fairly convinced it's going to go up, you can bet your bomb dollar it's going to turn down for a day or two just to prove you wrong. But that's something that's working there with crowd behavior, swarm behavior. I've never put my mind to that problem, wondering what that's all about. But that's open there for some clever person out there to solve that problem. It's something to do with herd behavior.
Okay, we've run out of time now, folks. We've been an hour. So sorry we couldn't answer all the questions. Well, there's various stocks and things, quite a lot of questions. So we could look in the we could over Christmas when we come over have a look in the forum if you want to post a question in there. We'll spend some time in the VSA Club forum. Tom, do you want to say anything to everyone?
We're going to do a newsletter Sunday, and I wish you all a very, very happy Christmas, and of course a happy New Year, and look after yourselves. Don't eat too much, which is a problem over Christmas. All those lovely puddings and things with cream and everything all over them. Whoa. But there you are. We have to overcome that. So I'll say good night to everybody for now, and thank you very much for listening.
Okay then folks, so as you heard, there'll be a newsletter posted over the weekend. This seminar is being recorded, and all being well, that will be uploaded today/tomorrow to the VSA Club archive. So with that, we'll all say goodbye. Thank you very much, and we'll see you next time.
Welcome to GoToWebinar, Webinars Made Easy.